Pavel of spreadcharts.com. Welcome back to Face. How you doing, Pavel?
Hi Dale. Yeah, I'm doing fine. It's nice to hear
Okay.
you.
Yeah, good to have you back. What's on the menu?
Okay, so do you hear do you
Yes,
see my screen? Great.
yes, got it. Your watch
So,
list.
okay. So today I want to talk about commodities, but start with a broader picture because I think that the risk is building up in the broad market, in the stock market. That does not mean it is a wise strategy to short equities. I think it's pretty dumb because it's impossible to time the top with precision. But if you just open up the VIX term structure chart, this is the current term structure curve on VIX futures, and compare it with the 5-year and 50-year, 15-year average. And remember, these averages are not over the entire 5 and 15 years, but uh, uh, these are averages at this or in this part of the year. So on July 9th, 5-year over the past 5 years, and July 9th over the past 15 years. So it takes, you can say, seasonality into account. And you can see that the current curve is pretty cheap. Given the geopolitical risks and the upcoming election, I think the VIX is cheap. And I also have another chart because speaking about the elections, I have October VIX futures butterflies, which is the current year, the blue one, compared to previous two elections in 2020 and 2016. And I think about this chart as sort of a risk premium in the VIX futures with regard to the upcoming elections. You can see that in 2016, there was basically no risk premium. But in 2020, there was a significant risk premium in the market. And right now, we have drifted somewhat below that 2020 level. And you have to ask yourself if this is, if or the current risk premium is low or high. I think it's still cheap given the uncertainty about Biden's health and the uncertainty related to the case if Trump will not win. So what he will do? Uh, is he gonna acknowledge the results of the election or not? Is there some repeat of January 6th? So all these uncertainties, I think, are not factored in the price, not just the butterflies, but the VIX structure itself. So I think there will be some kind of volatility event between now and the elections. And as I told you, I will speak about commodities, but I will start with rates. Everybody watch rates, and it's understandable. So here I have on the top sub chart, I have inverted $10 Treasury future, 10-year Treasury futures. So basically, the chart is correlated with the 10-year Treasury yield.
Okay,
And below, I have the price of Brent crude oil. And normally
interesting.
people think about it. Yeah, there is a relationship between the treasury yield and commodities, especially oil. That's normal. But normally people think that it's the bond market that affects the commodities. And I would say normally that's true. That's correct. But I can see a potential wild card where it will be the crude oil that will move the bond market because I think there is a lot of or there are many international players with a stake in the current elections. And it's not just Russia, it's also Saudi Arabia, China, Iran, and others. And I outlined this scenario even some time ago. I guess it was autumn last year, that these players will be interested in electing Trump instead of Biden. Uh, they do not like Trump. I think that could be misguided, but I simply think that they hate Biden and they want their candidate. I mean, their preferred candidate is Trump, and they want to help him get elected. And the best way to do that is to hike the price of crude oil going into elections, and that in turn could move the bond market and crush the risk assets. So I would watch crude oil, I would watch gasoline because crude oil is just an input and it's the gasoline that's important to Americans at the pump. And I have no supporting data, or of course, you can browse through the positioning, which is bullish in gasoline, seasonality is mixed, and so on. But I think there is a decent risk reward in this trade to go long gasoline and maybe speculate also in crude oil itself and speculate on their price going up. Gasoline is just better because the risk reward is better. I think there is much more upside relatively in gasoline compared to crude oil. But yeah, that's
You
my
really believe China would rather have Trump than Biden
yes, I think so
and Iran?
because yes, I definitely think so because
Oh,
uh, speaking about Biden, Biden, as you probably know, it's just more about the people around Biden, the establishment. And I think what these players are interested in, it is that the people surrounding Biden, they have, if you deal with them, they have their own beliefs. They are receptive to beliefs, no matter what you think about those beliefs. But if you deal with Trump and people around Trump, these people are receptive to money, to trade deals, and this is kind of a leverage that I think is much more attractive to China or Iran and others
okay.
rather than the circle around Biden. I'm not, I don't want to delve into politics because I would
Too
alienate
late.
half of listeners. I'm European, so well, I do not want to say that I don't care because everybody should care about the US election results. But I would not be directly affected if you elect Biden or if you elect Trump.
Where are
But
you, Pavel? In Europe.
I'm in Czech Republic, Central Europe.
Okay. All right.
So,
So Russia doesn't worry you.
uh, kinda. I mean, it's not an immediate worry like for people in Baltics or in Poland.
Okay. Right.
But you know, yeah, I understand that for the Eastern Europeans, Biden is a preferable candidate.
Yeah.
I get it, but
Yeah.
I don't want to delve into politics. I understand the
Okay.
point of view of people in the US and especially people living in democratic cities. And personally, I've been into the US, and I would not want to live in democratic
Uh,
cities. And
All
just
right.
say,
So
let's say that.
how are they going to cut? I mean, there are many ways they could manipulate this to cut supply. Do you think it could be as radical as some type of incident in the Persian Gulf?
I don't know. Maybe I think there's no need for radical solutions. You can just, for example, the Saudis can ramp OSP for the US while slashing the OSPs into Asia. Iranians can start to store crude oil in tankers. Uh, these kind of actions, I
Okay.
think, are enough to send the price higher because yes, there is some pain associated with that, but it's just temporary pain. And I think there is a
It's worth
decent
it.
payoff.
Yeah.
Yes.
Okay.
So
All
that's
right.
one
Very
idea.
interesting take. Because technically, don't you think it's pretty critical? I was looking at WTI that it holds like say the 78 to 80 level technically. uh, that it should be a well-supported area if your scenario does unfold. See that 80 area? Yeah,
Yeah, I mean, it's possible that the price can decline into this
yeah,
consolidation between
okay,
78, maybe 77 and 80. I think that's possible. But it will be much more bullish if the price stays above 79, as you say.
yeah,
But yeah, we shall see. I mean, in the medium term, I'm much more bullish on gold and assets that would benefit from falling rates. But in the short term or coming into the elections, I think this is a risk we have to take into account. And I mean, I don't know if this plays out as expected. I'm just hearing everyone uh, forecasting rate cuts
lower,
and dropping rates and so on, crude lower. And this is something that has appealing risk reward. Maybe its chance of success is below 50%. I can, I
yeah,
acknowledge that. But if oil breaks out, I think that would surprise many people, and that would send U.S. markets, not just bonds but also equities, much lower.
okay,
So
yeah,
that's crude oil, and I have two potential ways how to play this if you don't want to touch crude oil and the geopolitics associated with crude oil, and that's soybean oil and sugar. These are commodities that historically have positive correlation with oil, and
yes.
they have their own tailwinds. Uh, Soybean oil have a slightly favorable seasonal trend going into autumn. It is
Are they near
incredibly
the lows like the beans? I think are very close to making new lows for the move. So is bean oil, the crush? Okay, so is that bean oil right there?
This is bean oil. This is soybean oil,
Yeah,
simply because of the correlation with energy, with oil.
yeah, it
Yes, you
looks
can see
better.
it's also much oversold, historically oversold. You
Yeah,
can zoom out even further. Such periods where when the net positions were below 100,000. This is very oversold market. And
it's used for jet fuel now. They're using the bean oil for jet fuel.
really, I know it's used in making biodiesel, but
Yeah,
I'm not familiar with.
it's a new it's a new
Mhm.
breakthrough that they're going to start using it for jet fuel.
Uh-huh.
So
Yeah,
that's
it's
interesting.
nice to
And
know.
sugar is what, ethanol?
Yeah, sugar is ethanol, so that's used
Okay.
in
And that's
biofuels.
gotten crushed in the last 6 months, sugar, right? So it's really come down a lot.
Yes, that's true. It's very low. I can, just open up the sugar itself, the chart for sugar itself. And yeah, you're correct. Its price is down,
Yeah,
but I think it's not catching a falling knife by now. It
right,
seems it kind of bottomed.
right.
So that's another thing I like about it. It's still, I mean, the positioning in sugar, it's still pretty appealing if you take a look at the commitments of traders' data. Uh, I mean, it's not as extreme as in spring, but the positioning is still favorable. And these are my two favorite ways how to play that opportunity. I mean, because you can be right, even though that geopolitical catalyst on oil won't play out. So you can still be right on soybean oil and sugar. And that's what I like about these two markets. And it's also possible to play this through inter-delivery spreads. We have some really nice looking signals that our machine learning model found some time ago. Uh, these trades are already mature, I would say, because the signals were valid in June, and now these spreads are looking very strong. And here is soybean oil, and I think No, there is no spread on sugar, but there is a long signal on white sugar. So these might be, potential ways how to play that. And yeah, I kind of like these two opportunities. If we get a geopolitical tailwind, good. If not, these trades can still play out favorably.
Okay, some interesting concepts you have there. Um, Anything else you want to talk about these spreads or anything else? If not, you could show people how they could reach you. And I know that you have a ability for people to try out um, your algo to check it out for free. You have a free version. You want to go
Yeah,
there?
sure. Well, maybe I would just say that one last thing that I also like agricultural commodities in general. I'm long agricultural commodities, and because yeah, they are very, very incredibly very
Do
oversold.
they need a weak dollar to get going here, Pavel?
Yeah, previously I thought so, but I'm not so sure anymore.
Okay.
uh, because they don't need much. Some of them definitely, but in aggregate, I think they will because they are. I can observe that they are tightly correlated with rates, with yields to be precise. So if we get a rally in yields, I mean bonds going down, yields going up, uh, that would be positive for the dollar, and I have no doubt it would be positive for the agricultural commodity. So I'm no longer sure that the dollar have to go down in order for agriculture to go up. Maybe they will be positively correlated from now on.
Okay,
So
interesting. All
yeah,
right, great. You always bring to the table, like Mandy is saying here in our community, that you give us things to think about and consider, and it's an interesting narrative that you brought us here today, Pavel. They always are, and I
yeah.
always look forward to
Thanks.
talking to
Thanks.
you. And this is very interesting, and you know things that make sense that people aren't even thinking about. And you have this sideways range in the WTI right now that we could get a breakout either way.
Hmm.
This sideways range that we have in, yeah, there, and we could come out to the upside and rally above $100 and still not be in a bull market.
Definitely, yeah, I totally agree. I think that would catch many people off guard,
Yeah,
and yeah, the and it reminds me of 2008 because during these late cycles, uh, energy rallies and especially oil rallies are common. So because that's
yep,
usually the last straw that breaks the camel's neck, or in this case, U.S. consumer's neck. So maybe the
yeah.
oil rally is necessary for the US to eventually slip into a recession. I don't know, but I cannot rule that out. And I like the sentiment. I like the geopolitical setup here. And, that's the reason I like oil here.
Mark Chandler in a prior interview said to me that every major recession the U.S. has had has been preceded by an oil shock.
Yeah, clearly. I totally
So
agree with
you
that.
you you
Yeah.
brought you may want to look at that, but uh, it's interesting and really appreciate it. My trading warrior brother, people that want to follow your work, which I think they should, and
Sure. You can
spread
go
trading.
to
Spread
uh,
trading normally is there's more risk control with spread trading than just outright positions. Do you agree with that?
yeah, that's true. I mean, that's usually true because The spreads
Yeah,
are
there are
more
exceptions.
sensitive. They are more sensitive to, if you mean spreads on physical commodities, they are more
Yeah.
sensitive to the underlying conditions in the physical market. That's normally beneficial because you filter out the, geopolitics and, the fact that bonds are rallying or falling, that doesn't have such a great impact on spreads. On the other hand, if you get a problem in the physical market, crop damage or something like that, spreads will squeeze much more than the underlying. So it's a double-edged sword, but if you are
Okay.
interested in trading the physical commodity itself and filter out the macro and whatever, then the spreads are a great way to do that. But we are not focused just on spreads. We are doing commodities or even macro, and lately even cryptocurrencies. For example, we nailed the top in Bitcoin. I mean, the move lower. It was around here
Nice.
when we turned bearish. So because our platform has data also for cryptocurrencies that can be very useful. So you can check our blog and this video, which is unlocked video from our research. And so you can go to our homepage and sign up for our software, either for the free version or the premium version that has the research, the signals generated by our complex machine learning model, and some advanced stuff like some statistical charts and so on. So you can check that out.
Okay. Did you play hockey as a kid?
No, I played tennis.
Oh, okay. All right. Just checking. A lot of great hockey players come from your hometown. All right.
That's true.
So
That's true.
you're just a great analyst. So, it's probably fewer of those than there are hockey players in Czechoslovakia. So thank you so much, Pavel.
Yeah,
Really
thank you, Dale.
appreciate it. Yeah, much success to you and your subscribers in the upcoming months. And you and I will talk in the fall when all of this will be going down.
Yeah, I'm looking forward to it.
Oh,
Definitely.
all right, Pavel, holla everybody at spreadcharts.com on X and check out his work. And that's going to be a wrap. Everyone have a excellent day and make the most of it. And don't just count your pips, count your blessings. You could join the team in 20 minutes on the morning edge. And the team and I will see you tomorrow to trade the CPI live. Adios, everyone. And thanks again, Pavel. Appreciate
Thank
it.
you. Thank you, Dale. Bye.
Bye-bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.